Hey guys, welcome back to another week of fundamental analysis. Yeah, we just wrapped up June this year, and I have just finished 1 month of just trading gold and oil, which is the two markets I'm going to be focusing on. You can see here, this is my month. We've had three trades, two on gold, one on oil, two wins on gold, one loss on oil. We have made 2.25 R. So yeah, pretty good month for this month. Let's have a look at that oil trade I've taken. I'll show you the analysis here was, an uptrend with oil. I had fundamental backing with it. I took a position around here, stop loss under this zone here, and you can see I just got wicked out and it pumped up. I would have broke even. I would have moved my stop loss to break even after this push here, which broke this high, and would have got taken out. So it would have been a break even anyways if I had managed to stay in. But that's the trade. Last trade for the month. We are up 2.25%. So if we go sum this, which is great, I'm very happy with that. I'm going to stick with gold and oil only for the rest of the year, see how I go. If I become more confident, I might add another market, but it's looking really good. If I can do this for another 3 months, with, after the 4 month, including June, July, August, and September, if I can be profitable overall with those 4 months, we're going to start to increase risk. So you can see I'm risking around $40 Australian dollars per trade. So if I can get, start risking $100, $200, then which is 1% of my account or all the funds I have, that will be very, very good, and we can actually start earning some decent money from trading. But let's go to the main thing, and that's our fundamental analysis PowerPoint. So this is covering the 24th to 30th of June. COT from last week. This came out a bit later. You can see there's a huge pump in the buys for the US dollar. We had a pump for Aussie as well, but yeah, our main focus is US dollar, 15% bullish increase. We had oil and gold remaining the same, but for this week we had a slight decrease in USD, still very long bias, which is, would pair nicely with oil, going long for oil. You can see oil and gold both 1% bias change, and they're super bullish long term. So yeah, it's with using just a COT report, we can potentially trade oil and gold in the upside. But if we go to the data, the change. So last week we had a +2 for gold and -2 for oil. This week we had a +3 for gold and -3 for oil. So kind of conflicting. We don't really have bullishness on the oil, at least from a fundamentals point of view. The change we had this week was GDP being flat from expected and unemployment claims being flat from expected as well. So GDP not really moving, and although it is the final, it's not the advanced screening, it's still important. And because it wasn't much of a change from GDP final, we know that, the GDP as a reflection of economic activity, using oil as a raw material, because it hasn't really been higher than expected. I can't really say oil's got backing from a fundamental point of view. Also, on the flip side, GDP being flat is probably a good thing for gold, in the sense that, if we have slowing economic activity for the US economy, it just leads us to suspect more conservative approach from the masses. And we all know conservative, safe haven gold is the main choice of item, being a finite resource. So actually kind of bullish on gold this week, especially with the COT being +1, heavily long percentage base. So last week's data, we see a bit of a mixed bag. We had, higher than expected composite HPI. I believe that is for housing, how much housing increased annually, prices of housing that is. But then you have conflicting news in terms of lower new sales, lower new home sales, lower pending home sales month to month. So sort of home sales are conflicting. We do know consumer confidence is increasing from both CB consumer confidence as well as where is that one? There's another one. Yeah, consumer sentiment from the University of Michigan. We know with those two data points that companies are spending more, and the households spending more, just slightly though. So um, we could say that's bullish for USD, but then like we know, GDP, which is the big guy, and PC, which is the big guy, were both neutral, meaning the economy is not really, the US economy is not really doing better than expected. It's just doing what it is meant to be, at least from a fundamentals point of view. So we can't really say it's bullish for USD this week. Overall, yes, with the little news like consumer sentiments, but the big news like GDP and PCE, I wouldn't say too much for the US dollar. Next week is actually quite big. We have PMI, ISM PMIs, services and manufacturing. We have job openings. We have NFP, unemployment rate as per usual. So yeah, very big week. I obviously will stay very poised in the market. Could potentially even get in if we have a nice reading on manufacturing PMI on the Tuesday. Maybe get in on Tuesday or Wednesday and ride these other news events. But yeah, for the time being, what's my take home? I said although USD had some good news, I'm still keen for long for gold, meaning weakness in the dollar, purely based off GDP and PCE numbers being neutral. And my rationale was even in an inflated market, the US economy is still not doing any better. Again, holding on to the belief of stagflation. Oil, mixed news. We had positive on COT, but in terms of the short-term economic news, that it was actually bearish from my understanding of things, how I'm interpreting the numbers. I'm not going to trade. So the only trade I'm going to be is for gold for potential setups. Now, if we go to the charts, let's have a quick look. For the daily, for the dollar index, we can see it's been going up. There is a resistance area here that's going to be met soon. So we could potentially see a reversal, right? We could potentially see a reversal down, and what that means is if the dollar's weakening, we could potentially see this, right? Cool, true. So in terms of this gold trade here, if I go on the 4 hour, we're meeting some resistance here right now. I might put this as resistance as well. So we've got some resistance points. You can see that support here on the daily held quite well, right? Shot up from that zone. What I'm trying to look at is potentially that's what I'm looking for. So if we use in terms of from a fib retracement point of view, I am going to, we'll do it here. That's around the 50% mark, right? I might even add another one. That's 50, we'll add 66 as well. Right, so if we can hit that 50% mark here, which is pretty much in this area, have the lows under here, we could potentially ride this up, right, for gold. But that's dependent on what price action does. So I'm going to pop this as red. The only thing is I don't want to enter here. I want to wait for it to actually break clearly, retest, and then pop up. So gold's the only thing I'm looking at. If we wanted to look at oil, just like I said, I've taken a position here and lost by literally like a couple pips. Oil could shoot up because it is contracting right now. You can see price is just pretty much going down, up, down, up, down, up, just trying to build, and it's going to either shoot down or it's either going to shoot up. We can't predict. We only can, use our readings on the market, have it at a valid spot, and take that opportunity. I tightened my stop loss obviously down here. If I did it here, I still would be in the trade, but again, it's all risk to reward. So look, I've stuck to my rules. That's a losing trade. Would cop it on the chin. Let's get rid of that. Right, clean up the chart a bit. Let's put this around here. I think I like the look of that better. Right. Yeah, this is basically it is what it is type of deal for this one. I might just draw a dotted line just to make it a bit cleaner. I want to see what happens to oil. Just curiosity. I'm not going to enter it. It's not in my trading plan this week. So unless we have changes in data points here from 2nd of July for manufacturing, 3rd of July for job openings, if that can change the momentum into oil, into a more bullish reading for oil, then I could potentially get in. But for now, let's stay on the sidelines. I'll catch you guys next week. Peace.